If you woke up this morning thinking your dual citizenship was about to be taken away, I need you to take a deep breath and stay with me for the next 20 minutes, because what you've been hearing on social media is not the full story. And the truth is far more nuanced than the panic-inducing headlines suggest. Welcome to US VisaTube, where we cut through the noise and give you facts, not fear. I'm your host, and today we're tackling one of the most misunderstood topics circulating right now: the state of dual citizenship in America. There's a proposed bill making waves. There are long-standing tax requirements that confuse people. And there's a whole lot of misinformation creating unnecessary anxiety for millions of dual citizens and their families. By the end of this video, you'll understand exactly what's real, what's proposed, what your actual obligations are right now, and most importantly, what you should and shouldn't be worried about. So let's dive in. The proposed bill that's causing panic. Let's start with what's generating the most anxiety right now. On December 1st, 2025, Senator Bernie Moreno of Ohio introduced legislation called the Exclusive Citizenship Act of 2025. This bill proposes to eliminate dual citizenship for Americans entirely. According to the text, it would require that citizens of the United States owe sole and exclusive allegiance to the United States only. If enacted, this legislation would mean you cannot be a United States citizen if you're also a citizen of another country. The bill would give dual citizens 1 year to choose. Either submit written renunciation of your foreign citizenship to the Secretary of State, or submit written renunciation of your United States citizenship to the Secretary of Homeland Security. Those who fail to comply would be deemed to have voluntarily relinquished United States citizenship. Now, before you spiral into panic mode, here's the critical part that many social media posts conveniently leave out. This bill is not law. It has not passed. It has not been enacted. And according to multiple legal experts and tax professionals who specialize in this area, it faces significant constitutional and administrative barriers that make passage extremely unlikely. Dual citizenship remains completely legal today. There are no renunciation deadlines. There are no new requirements that have been implemented. Nothing has changed for dual citizens as of right now. Senator Moreno, who was born in Colombia but renounced his Colombian citizenship, stated that being an American citizen is an honor and a privilege. And if you want to be an American, it's all or nothing. It's worth noting that if this legislation were enacted, it could potentially impact high-profile individuals, including First Lady Melania Trump, who reportedly remains a dual citizen of the United States and Slovenia, as does her son, Barron Trump. But here's what matters for you. Legal experts believe this proposal is extraordinarily unlikely to survive judicial review, even if it somehow managed to pass through Congress, which itself is highly uncertain. The United States has a long history of permitting dual citizenship, and there are constitutional questions about whether Congress has the authority to force current citizens to renounce one nationality or lose the other automatically. Understanding current dual citizenship law. So, if the proposed bill hasn't changed anything yet, what are the actual rules governing dual citizenship right now? Let's establish the baseline that applies to everyone watching this video today. United States law does not require American citizens to choose between United States citizenship and another nationality. You may naturalize in a foreign country without risking your United States citizenship. As a United States citizen with dual nationality, you owe allegiance to both the United States and the foreign country, and you must obey the laws of both countries. The State Department is clear on this. Having dual citizenship, also known as dual nationality, means being a citizen of the United States and another country at the same time. Whether you were born an American citizen or became one through naturalization, if you have dual citizenship, you do not have to choose one nationality over the other. You can become a dual or multiple national of the United States and other countries. If you were born in the United States and have a parent who is a citizen of another country, If you were born outside the United States to one or two parents who are United States citizens, or if you naturalize as a United States citizen while keeping the nationality of another country, the key requirements that United States citizen dual nationals must follow right now are straightforward. You must enter and leave the United States on your United States passport. You are not allowed to enter on your foreign passport based on United States law, even though you may be required to use your other country's passport when entering or leaving that nation. The real obligations you need to understand. While the proposed legislation remains just that, a proposal, there are very real obligations that dual citizens must follow today. And this is where many people get into trouble. Not because the rules are designed to be traps, but because they simply don't understand what's required of them. The most significant ongoing obligation involves taxes. The United States is one of only two countries in the world that taxes based on citizenship rather than residency. The other is Eritrea. This means that if you're a United States citizen, you must file taxes in the United States every year, regardless of where you live or what other citizenship you hold. You must report worldwide income to the Internal Revenue Service, even if you also pay taxes in your country of residence. Additionally, you must pay United States tax on any United States sourced income, such as rental income, dividends, or business income, regardless of where you live. Now, before you panic about double taxation, understand that the United States has mechanisms to prevent you from paying full taxes in both countries. The country maintains dozens of tax treaties worldwide. And even without a treaty, you can use three Internal Revenue Service domestic rules. The Foreign Earned Income Exclusion, which for 2025 allows you to exclude up to $130,000 of foreign earned income. The Foreign Housing Exclusion or Deduction, and the Foreign Tax Credit. These measures mean that most dual citizens don't pay full taxes in both countries. However, and this is critically important, the filing requirement is not the same as a tax payment requirement. Even if you owe no tax after applying credits and exclusions, you still must file. Many dual citizens mistakenly believe that earning income exclusively in their other country of citizenship exempts them from United States tax obligations. This misconception leads to years of non-compliance, substantial penalties, and complex voluntary disclosure procedures that could have been avoided with proper understanding from the beginning. Federal Bureau of Investigation and Foreign Account Reporting. Beyond your annual tax return, there's another critical reporting requirement that trips up countless dual citizens. The Foreign Bank Account Report, commonly known as FBAR. This is where many people, even those who are diligent about filing their tax returns, run into serious problems. If you have a financial interest in or signature authority over foreign financial accounts and the aggregate value of those accounts exceeds $10,000 at any time during the calendar year, you must file an FBAR. This is filed separately from your tax return through the Financial Crimes Enforcement Network's BSAE filing system. The $10,000 threshold is low, and it's an aggregate total across all your foreign accounts. Let me give you an example. Sarah is a United States expat living in Germany. She has 3 foreign accounts: a checking account with a maximum balance during the year of $4,000, a savings account with a maximum of $5,000, and an investment account with a maximum of $2,500. Her total maximum aggregate is $11,500, which means Sarah must file an FBAR. Reportable accounts include foreign bank accounts, brokerage accounts, mutual funds, retirement accounts, and even life insurance policies with cash value. If you have signature authority over business accounts, even if you don't own the funds, those accounts count toward your personal $10,000 threshold. The FBR deadline is April 15th each year, with an automatic extension to October 15th. You don't need to request this extension. It's automatically applied. This is separate from your tax return deadline. So, an extension for your tax return doesn't extend your FBA deadline and vice versa. the penalties for failing to file an FBAR can be severe. For non-willful violations caused by negligence or misunderstanding, penalties can reach up to $12,921 per violation as of 2025. For willful violations involving intentional or reckless disregard, penalties are the greater of $165,353 or 50% of the account balance at the time of the violation. In the most severe cases, willful violations can result in criminal charges. The United States government has made it nearly impossible to hide unreported foreign accounts. Under the Foreign Account Tax Compliance Act, known as FATKA, foreign financial institutions are required to report account details of United States persons to local tax authorities, who then share this information with the Internal Revenue Service. Your foreign bank is likely already reporting your account details directly to the United States government. If you've fallen behind on FBAR filing, don't panic, but don't ignore it either. The Internal Revenue Service offers programs like the Streamlined Filing Compliance Procedures, specifically for expats to get back into compliance, often without penalties if the violations were non-willful. The key is to address the issue before the Internal Revenue Service contacts you. Additional reporting requirements. Beyond FBAR, there's another form that many dual citizens need to be aware of. Form 8938, also known as the Statement of Specified Foreign Financial Assets. This is part of FATKA reporting and is filed along with your tax return itself. While FBAR and Form 8938 both involve foreign account reporting, they serve different purposes and have different requirements and thresholds. Form 8938 generally has higher reporting thresholds than FBAR. For single taxpayers living abroad, the threshold is $200,000 on the last day of the tax year or $300,000 at any time during the year. For married filing jointly, it's $400,000 on the last day or $600,000 at any time during the year. The filing deadline for Form 8938 follows your tax return deadline. For expats, that's typically June 15th, with the possibility of extension to October 15th. If you file Form 4868, it's possible to need to file both FBAR and Form 8938, as they capture different information and serve different purposes within the government's efforts to prevent tax evasion through unreported foreign financial assets. Practical considerations for dual citizens. Let's talk about some practical situations that dual citizens face and how current law addresses them. These are real-world scenarios that help illustrate what dual citizenship actually means in day-to-day life. If you're a dual citizen traveling internationally, you must use your United States passport to enter and leave the United States. This is non-negotiable under United States law. However, when you're traveling to or from your other country of citizenship, that country may require you to use their passport for entry and exit. This means many dual citizens carry both passports when traveling. Local authorities in your other country of citizenship may not recognize your United States nationality if you're also a national of that country, especially if you didn't enter using your United States passport. This can affect consular or assistance. Even if a dual national requests that police or prison officials notify the United States Embassy or consulate, they may not do so, and United States consular officials may not be allowed access. Military service is another consideration. Some countries require mandatory military service, and dual nationals may have to fulfill this obligation in their other country of citizenship. This obligation may be imposed immediately upon arrival or when attempting to leave the country. The United States government recognizes that many countries require military service as a condition of citizenship, and fulfilling that obligation doesn't automatically threaten your United States citizenship. However, serving in the military of a foreign country that is engaged in hostilities against the United States, or serving as a commissioned or non-commissioned officer in certain foreign militaries can lead to loss of United States citizenship. Registration. Requirements vary by country. Some countries require you to register your other nationalities. Others prohibit dual nationality entirely and may force you to give up that country's nationality if you're also a United States national. This might require a formal act of renunciation. For families with children born abroad to United States citizen parents, the process of establishing the child's United States citizenship has specific requirements. If one or both parents are United States citizens, children born outside the United States may acquire citizenship at birth depending on the parent's residence history in the United States. Parents need to apply for a consular report of birth abroad and a United States passport for the child. Financial planning considerations. Dual citizenship has significant implications for financial planning that go far beyond annual tax filing. Your second passport can affect retirement accounts and how they're taxed, inheritance rights and asset transfer after death, property ownership laws that differ between countries, investment regulations that may restrict certain activities, and tax treaties between nations that can either help or create additional obligations. Retirement planning becomes more complex. United States tax treatment of foreign retirement accounts varies, and some foreign pensions may not receive the same tax advantage treatment as United States retirement accounts. Understanding how your retirement savings in one country will be taxed when you're living in the other country requires careful planning. Estate planning and inheritance laws differ significantly between countries. Some countries have forced heirship rules that limit your ability to distribute assets as you wish. Others have estate taxes or inheritance taxes that could apply. Coordinating estate planning across multiple jurisdictions requires specialized advice. Property ownership can be affected by your citizenship status. Some countries restrict foreign ownership of property, but may have different rules for citizens. Understanding these nuances is crucial before making significant real estate investments. With increased Internal Revenue Service oversight on foreign assets, dual citizens must take a proactive approach to financial planning, consulting with tax professionals who specialize in international tax law, who understand the complexities of dual citizenship, and who can navigate the intricate web of tax treaties and reporting requirements is no longer optional for serious dual citizens. It's an essential investment in your financial security. What you should do right now, given everything we've covered. What should you actually do? Let's focus on actionable steps that will keep you compliant and protected. First, if you're a dual citizen and you're current on all your tax filings and FBAR submissions, excellent. Keep doing what you're doing. Make sure you're aware of the deadlines each year. Understand what needs to be reported and maintain good records of your foreign accounts and their maximum balances throughout the year. Second, if you've fallen behind on filings, don't continue to avoid the issue. The Internal Revenue Service has programs specifically designed to help people get back into compliance, often without the severe penalties you might fear. The streamlined filing compliance procedures are designed for taxpayers whose failure to file was non-willful. The sooner you address past non-compliance, the better your options. Third, if you're considering obtaining a second citizenship, understand the tax implications before you commit. Becoming a citizen of another country doesn't change your United States tax obligations, but it may create new reporting requirements or affect how certain assets are taxed. Consult with an international tax professional before making the move. Fourth, keep good records. For FBAR purposes, you need to track the maximum balance in each foreign account throughout the year. This means you can't wait until tax time to figure it out. Bank statements showing the highest balance during the year are essential documentation. Fifth, regarding the proposed Exclusive Citizenship Act, stay informed, but don't make drastic decisions based on a bill that hasn't passed and may never pass. Monitor reputable news sources and official government websites for updates. If the bill gains traction and appears likely to pass, that's the time to consult with an immigration attorney about your options. Making irreversible decisions like renouncing citizenship based on a proposal that's unlikely to become law would be premature. Finally, if your situation is complex, such as if you have substantial foreign assets, business interests in multiple countries, or complicated family structures across borders, invest in professional advice. The cost of a qualified international tax attorney, or CPA, who specializes in expat taxation is far less than the penalties you could face for non-compliance, and the peace of mind is invaluable. The bigger picture. Dual citizenship continues to offer tremendous value and opportunities. The ability to live and work in multiple countries, enhanced travel flexibility, broader business opportunities, and the security of having options in an uncertain world are significant advantages. The current legal framework in the United States permits dual citizenship and provides mechanisms to prevent double taxation. Yes, there are compliance requirements. Yes, you need to file certain forms and report certain information, but these requirements are manageable with proper understanding and planning. The proposed Exclusive Citizenship Act represents a political position and a bill introduction, not a change in current law. Even if it were to advance, which experts consider unlikely, it would face substantial legal challenges. Constitutional scholars have raised questions about whether Congress has the authority to force current citizens to renounce one nationality or automatically lose another. What you're seeing in terms of enhanced scrutiny, increased information sharing between countries, and stricter enforcement of existing rules is part of a broader global trend toward financial transparency. This isn't unique to the United States. The Common Reporting Standard has created a worldwide framework for automatic exchange of financial account information. Over 100 jurisdictions participate in this system. For dual citizens, this means the era of unclear obligations and inconsistent enforcement is ending. The rules are becoming clearer, enforcement is becoming more systematic, and the expectation of compliance is higher than ever. But with clarity comes opportunity. When you know what's required, you can plan accordingly, stay compliant, and enjoy the benefits of dual citizenship without the anxiety of